Moonbound, what's going on, guys? We are looking at AMC up to $20 this week on the current breakout trajectory, but if we want to pay attention to the numbers, that's what we're going to be able to break down in this data science full video. What's going on? I'm an Andrew, and that's a Meatball, and we are looking at the stock. We are also going to pay attention to where GME breakouts are going to be and why BlackRock is in hot water, says the Silverback himself. Let's take a quick listen, slap that like while we do, and make sure that you guys are watching to the end, because this video is going to be explaining why you are still going to get splividends if you invest this week, and how exactly are the like button going to explode from this. So make sure that you have commented out which like you guys are and which retail investor dream you are attaching yourself to. And let's listen to the Silverback.
All right, Senator Tom Cotton accusing BlackRock of being involved in a scam to decrease drilling for oil and gas. Now, a large amount of companies have been following this so-called ESG movement, mostly to appeal to the woke crowd. It's also a good way to make a lot of extra money. Joining me now is Strive founder Vivek Ramaswamy.
And that is going to be just part of what BlackRock is in hot water for. And remember, if you're a big bank and you're about to run out of money, or you're in very, very hot water and in congressional investigations for crimes that you've done against retail investors, you're probably gonna wind up on this show. That's what we're here to report on. So if you guys like that content, if you guys appreciate it, make sure you guys know that we're here for a good time and a long time. Let's expand out the x-axis a little bit so that we can pay attention to where the short failed to delivers are spiking. Last time was in July 2021. We covered this in our 7.9 million video that we just released yesterday, but take a look. AMC had its, its Ortex short interest percent of free float 19.17% over back in July 2021. Right now, it's at Ortex reported 1974. That's almost the exact same short interest, as well as very much the, you look at that bar chart here, look at the orange bar chart. It's basically a big U. So you're looking at the same level, peak levels of fail to delivers peaking again in July. So pay attention to the fact that we are looking now again at 2 Julys in a row. One of these is right now, and one of these was that magnificent $77 high that AMC reached last July. Okay, take a look at GameStop, similar thing, right? We're looking at whether or not FTDs are seeing similar trends back in September. Let's expand this out a little bit to July. Back in July, you saw the exact same. Failed to delivers got to 1.73 million. Right now, we had 2 million failed to delivers on GME as of June 6th, and then we had, let's see, slightly less, but pretty much the same short failed to delivers of GME the next interval. So make sure that you guys are paying attention to the fact that these FTDs are pervading the data space, and that's something that's going to be on the top of your radar for the coming weeks. All right, let's keep listening to what Mr. BlackRock is doing and what the Silverback is calling them out for.
You know, Senator Cotton saying that he's going to investigate these Wall Street firms that are part of the, quote, climate cartel. Do you like the idea now that there's more light being shined on this?
I think it's excellent for there to be more transparency on this issue, because if you think about it, Charles, if you got the CEOs of Exxon and Chevron and ConocoPhillips and BP in a room, and together they coordinated to cut production and gas prices spike at the pump as a result, that would be an obvious price fixing violation, an obvious antitrust violation. People would be going to jail. But what's happening in capital markets is that the top shareholders of those companies, institutions like BlackRock and State Street and Vanguard, are effectively forcing those companies to do the same thing, and somehow that gets celebrated as ESG instead. So just like you have the OPEC cartel abroad that President Biden is visiting this week to beg to produce more oil, what the ESG movement and the ESG cartel is doing is demanding that U.S. companies here at home produce less oil, and everyone pays the price as a result. So I'm glad that politicians like Senator Cotton are catching up and getting caught up on this issue. In fact, he's at least among the pack leading the way. But I think we need to have more of these conversations out in the open so that everyday citizens can even better solve this problem through the market.
So what do you guys think? Congressional arms in the mess of market fairness, right? We've had Congress people on this show in the past. My congressman in California, in fact, has been interviewed on this show. Pay attention, because that's pretty fun. Go and watch that video if you haven't yet. But at the same time, right, what exactly is the senator incentivized to do to clean up and make the markets more fair? if this actually sets a precedent for senators going in and actually changing the markets from a fairness point of view, from a retail versus Wall Street versus Main Street point of view, I think that is going to be something that could end up going a long way. But what do you guys think? I want to hear in the comments what you guys are curious about.
You know, what's really amazing to me is just the damage that the ESG movement has done. I was talking about this years and years ago. No one was talking about it. No one ever heard of it. I brought in folks who were advocates of it. And even since then, some have admitted it's gone astray. We see in Sri Lanka now where you've got rioting, people can't eat. You see in Europe, certain countries where farmers are being told they can't farm. You know, it's so destructive. I don't even understand why anyone will be a part of this. I know Wall Street finds ways to make extra money off of doing, quote unquote, doing good, but are you surprised at how destructive it's been?
I'm personally not surprised at how destructive it's been, but I think that it is eye-opening for people who used to think of this as some technical movement. ESG, what's that? What's with these three-letter acronyms? That's complicated. I don't understand it. Well, guess what? It was complicated, and it was designed to be technocratic by design to lull the public into submission. But now it's affecting the prices we pay at the pump. Now it's affecting how much food security people have in places like Sri Lanka. Citizens around the world are waking up to the fact that this ESG movement is now imposing mandates on their own lives that reduce their own quality of living.
Right.
And what's going on with these large asset management firms is it's not just the fees they charge through these ESG funds. It's worse than that, Charles. What they're doing is they're doing favors for big government, for the Democratic Party included, through the back door to get done through the private sector what government could not pass through the front door under the Constitution. You look at how many of BlackRock's alumni are now staffing the Biden administration, Council of Economic Advisors, Treasury Department, you name it. Look at who actually gets to administer the COVID stimulus packages and who gets to charge a fee for doing so. It's none other than financial institutions like BlackRock. So the companies at the top are benefiting from using their clients' funds to advance these ESG values, but the clients in those funds, the everyday investors of this country, are the ones who are left holding the bag. So
that actually ends up being a very important policy versus markets versus political question, right? So take a look at what ESG stands for. It stands for environmental, social, and governance. All right, so wait. Does the S stands for? Yeah, it does. Environmental, social, and corporate governance. And at the end of the day, it could likely be another big push, a facade to change whatever people want to see politically, right? Or it could be something that is a retaliation to the current wars and the current energy crises, right? But what do you guys think? Because I'm reading a Financial Times article right now of the different considerations of what the war is doing, what European funds are doing, right? Understand that European policies are likely a lot more socialist. A lot more of it is based around what is equitable and what is parity, and a lot of it is foreign to American markets and American investors. So what do you guys think? Is this going to be part of a long-standing investigation against BlackRock and large players in the market, or is this just going to be another cover-up? Well, let's find out. But the first thing that you guys have to do is congratulate yourself for making it to the end of the video. Thank you guys so much. We do giveaways often, right, on a monthly basis. So if you look at that Professor Meatball in the corner and you think, man, I want to stay for a while, hit that subscribe button, hit that bell button, and make sure to hit that like button if you found some interesting or educational things from this video. And we'll see all of you in the money. Peace.